The S&P 500 was up 0.47% today, closing at 6227.42. This uptrend that we've been in since the June 23rd low, right around the 5950 level, is still intact. We've been tracking against this 50-period moving average on the 15-minute chart, and that's been holding really well throughout the last several trading sessions. In fact, this morning we had a slight dip lower right into that 50-period moving average, and we saw an immediate bounce off of that support. Now, the thing that we were focused on throughout the trading session was the 6225 gamma exposure. We're looking here at our 0 DTE filter, and at the beginning of the trading session, we had both the 6200 and the 6225 strikes as the main targets. Once we blew through the 6200 strike early this morning, the 6225 strike became the most prominent strike, and you can see we gravitated to that level throughout the rest of the trading session. This is typically what we see in low volume holiday shortened weeks like we have this week. So this market continues to show a lot of strength. We've been hanging at new all-time highs over the last 3 trading sessions, and the gamma exposure data continues pointing to higher prices. We've been talking about this skew in the options market. This is very strong at higher strikes. That doesn't mean we're going to go straight up into the 6500 strike, but what this is showing is that market participants are positioning for an end-of-year run-up. Now, we think there's going to be a 3 to 5% correction potentially, maybe down to the 6,000 level, somewhere around there, before we see the next leg higher. So if you've been watching our YouTube videos for the last several weeks, you know our strategy has been maintaining hedges to the downside in case there is a rejection. We can profit off of those hedges, but we are continuing to look at long bias positions. We're continuing to lock in profits and roll our hedges up, basically just trading with the market in this channel up into these larger gamma exposure concentrations to the upside.
Thanks, Anthony. I'm reminded of our previous discussion about the seasonality this week. And that seasonality is that the market is typically bullish into the 4th of July. I have the VIX pulled up here, and you can see it is true that the VIX actually made its low on Friday, and it's been moving sideways since then, while the whole moving average has now dropped to a point where it is below the VIX. So this is technically a long signal using my methodology, but these lower levels do appear to be pretty sticky, and that's based a large part on the fact that every time it's hit this area for the last several months, it's been a pretty solid support. And we have GEX to back that up too. We really don't see much GEX in meaningful quantity below 16. So this 16 to 17 area seems to be very important. The volume today was mostly at higher strikes. We see volume at 24, 25, and all the way up to 30. So with the VIX moving sideways, and we still have markets climbing today, resuming their climb, or in the case of IWM, continuing its climb, we have a bit of a divergence there with the VIX. And the issue that indices are going to run into, in my view, is that we have this rising Keltner channel, which is bullish, but price keeps pressing above this. That combined with the whole moving average rising, eventually I would expect the whole to surpass price unless it goes into some sort of parabolic blow-off. The odds are that these upper GEX clusters, just above the upper dealer cluster zone, will likely be strong resistance for the time being.
Thanks, Sean. Next, let's take a look at a few names that we are actively trading. We'll start with UPS, up 1.02% today, closing at 105.54, and UPS looks like it's on the verge of a breakout. We saw a move above the big 100 strike just a couple of days ago, coming right into this large gamma exposure concentration at the 105 strike. And this is a name we've been trading actively for the last couple of weeks. Just yesterday, we locked in over $7,600 profit on a UPS call debit spread. We actually had the July 18th 100, 105 call debit spreads in one of our portfolios. We closed those out at $3.38, making for a really nice profit. If we go back to our original post, when we entered the trade, this was actually a position that we started out From a losing position, we entered the 100-105 call debit spreads earlier in June and ultimately needed to roll the position out to the July expiration to give it some more time. You can see from our post at the time just how these gamma exposure setups work. The 105 strike was growing, the 110 strike was growing. Meanwhile, UPS was trading at 99.50, coming off of a big support level down here at the 90 strike. And so that tag and subsequent consolidation, along with a large gamma exposure at higher strikes, gave us the motivation to add this position with a pretty decent size in our portfolio. So again, coming back to the current setup, even though we've exited the position, UPS is actually looking pretty good here for another leg higher. We like that it closed above the 50-day EMA and is maintaining above that 100 strike. And we're watching gamma exposure as it grows from 105, 110, and even up into the 115 strike. So we're looking at this as a potential secondary breakout opportunity above 105. And this will be something that we may look to re-enter in our portfolio. By the way, you guys can track our trades in real time as we manage our options portfolios by becoming a member at geeksoffinance.com. I'll put a link in the description below for you guys to check that out.
Even with the indices at or approaching important resistance, we're still finding long opportunities that we feel represent good risk reward. And one of those is Unity Software, ticker symbol U. And you can see here, it's been consolidating sideways for a few days. I like that the hole is starting to curl upward and we have this big GEX cluster up at 30. And the fact that we have this technical setup now where it's holding this support, I think it has a pretty good chance to make it to these higher strikes. Now, it does need to get past 25. That GEX cluster at 25 could act as a magnet, but it also may end up being a consolidation area. So we need to see what happens at 25. But once we get through 25 and 25 and a half, there's not much in between those prices and 30.
Thanks, Sean. Next, let's take a look at Tesla. Tesla up nearly 5% today, closing at 315.65. The gamma exposure is mostly concentrated between 300 and 400 on Tesla. Yesterday, the stock took a big hit with the headline news that came out. The Trump-Musk feud seems to be continuing, and this is going to be a theme most likely for Tesla for the next several months. Price has mostly been trading, however, over the last couple of months between 300 and 350, and we were already in a long bias position when the news came out. It was a small position, but we had the 340, 350 call debit spreads, so we took a hit on that, down $400 on the headlines that came out. We decided to take the remaining premium in our position, roll down to lower strikes, and roll out to a later expiration. So we ultimately ended up with the July 18th 310 320 call debit spreads. This 300 strike has been a big level on Tesla, and so when we saw the big drop down into the 300 during yesterday's trading session, we posted that we were going to roll the position and give ourselves an opportunity for a bounce out of this big 300 level. The gamma exposure, you can see at the time, was still looking pretty strong at 300 and above, so we were still seeing the skew to the upside. So with the big rally today, we are nearly back to break even on the position. We're right in the middle of that 310, 320 call debit spread, and so if we can just get a little bit more momentum, we'll likely be overall profitable, including the losses that we took on the position that we rolled yesterday. So this is basically how we try to manage our positions, even when there's a big news event or headline risk that you can't possibly predict. You oftentimes are still able to manage or roll your position either out into later expirations or down the options chain to lower or higher strikes. And if you want access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies, you can head on over to geeksoffinance.com. You can sign up and become a member. Members also get full access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade strategies and setups, and you can also track our trades in real time as we manage our options portfolio. I'll put links to all of that in the description below for you guys to check out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.